Hey guys, it's Carter with the Swing Trading Masterclass. Now in today's video, we are going to be looking at how we're up over $11,000 in a single month, which is one of the best swing trading months that we've ever seen in our entire swing trading career over the past 7 years of swing trading. So I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. And if you guys want to learn more about swing trading, check out our school. We have a fantastic school. It's an 8-week course where I teach you how to trade. I teach you my strategies, my approach. We have private live streams, quizzes, lectures, a group chat. But more importantly, we actually teach you to trade. It's not a get rich quick scheme. It's not alerts or anything like that. We teach you how to set up your scanners, how I set up my scanners. So if you want to invest in yourself in 2025, click the link and sign up, and you guys can get 50% off by using code BEGINNER. Only a couple of spots left for that code, so sign up before that sale ends, and I'll see you guys in there. And guys, let's jump into this. So like I said, $11,000 in a single month is one of the best swing trading months that I've ever had. So we're starting off 2025 with a huge bang, which is always good, extremely profitable, and we just got to keep this momentum going forward. Right now, I'm really focusing on the rule of threes. When I have 3 consecutive winning trades in a row, I take a step back, maybe a day off from trading, and I just watch the market. On the flip side, if I have 3 losses in a row, I'll do the exact same thing. The reason why I do this is it helps my mentality, it helps my emotions, because your strategy is just one piece of the puzzle. The other very important piece is going to be your emotions. Emotions are so heavy with trading. So the rule of threes and keeping an eye on my checklist, my strategy really helps minimize my emotional tolerance. So I wanted to bring that up in today's video because a lot of people always ask me, they'll go, Carter, why'd you take a day off? Why didn't you trade this stack? It's because sometimes, if I had a lot of great trades in a row, I just want to take a step back and not go crazy or heavy and think I know everything. So let's turn to the computer and look at some of our trades. All right, so what a day we've seen out of MasterCard. MasterCard did announce their earnings report, and now right before the earnings, I did sell about 50% of my stake. Now, the reason I did this, I'll be very transparent with you. The reason I do this is it's a 50-50 chance of making money, right? Often what we see is when a stock releases earnings, they will get a huge amount of buying pressure. Or they'll get huge amount of selling pressure. It all depends on the earnings. It's literally a 50-50 chance of making money. Like, look at this earnings right here where it popped up right the day before and then got absolutely crushed. So for me, it's a very risky time to trade a stock is through an earnings report. So to minimize risk, normally I will either cut my profit and just move on to other opportunity. But lately, when we're up handsomely on a trade like MasterCard here, like look at our, swing trading journal here. I'll show you guys kind of our trades here. We'll go to our monthly overview. So right now we're up about $11,000. And you might be saying, well, Carter, you only traded 1, 2, 3, 4, 5, 6, 7, 8, 9 stocks and made $11,000. Well, yeah, the reason I do that is I choose quality. Like I said, that the rule of threes for me helps me out so much because it helps just my emotional tolerance. So for me, that's one of the huge things that I'm really focusing on this year in 2025, as well as holding positions longer. I made a good amount of money in 2024 just off swing trading, but there were several times where I would sell a position too soon and it would continue to rally up. And I'm not complaining, about making money trading. I do this full time, but when there's money left on the table, you got to figure out a way to get it. And that's kind of what we're focusing on, is starting to not go heavy on the sell and sell all of your position, to go, okay, I'll sell 50% here and then I'll see what happens. And that's kind of what we had here. So with our MasterCard trade, which is the largest trade we've seen this past month, up $2,943.90. And now this comes at a moving average trade, which is really cool. So this is why, guys, having a good trading journal like this will help your trading, because you can figure out what strategies are working, what's not working. So I'll put a link to this down below. It's awesome. You can break it down by your monthly overview, weekly, your dashboard, your trade log, all that good stuff, your setup. and then there is a cool instructions to figure out how to get going. So check that out. But let's talk about the trade here with MasterCard here. And we actually are holding some shares as of right now. So for me, I love the expression MISS, MISS, make it simple, stupid. I'm not the type of trader where I'm going to have 300 charts up and I'm going to have scanners going off. I'm going to have, all that stuff. I'm very, very basic, honestly. So for me, the first thing I look for is trends. Trends, in my opinion, one of the most underutilized things traders don't even pay attention to. Every trader will trade differently, and the last thing I want to see you guys do is to find a stock on a downward trend and enter it because you think it's magically going to recover. When in reality, sometimes it's just better to find the momentum, find the trend, and find an undervalued point. So for me, that's what I focus on. So with MasterCard here, we had this really good upward trend, right? Where it hit these moving average lines several times, establishing good support, good resistance, and really just like them overall. Then we saw this. The stock went from 337 all the way down here to about $500. Now, this is where we kind of entered that trade is going to be near and around that that 90-day moving average line. So that blue line right here is where we started to get interest in it. Now, we also saw this at the time where it was just stair-stepping its way down. So we actually took a trade at a pretty low spot, which is one of the lowest, honestly, the lowest lows that we've had. So let's go ahead and find MasterCard. MasterCard here, entry price is at 572 cents. So almost on that peak low, right? Almost there. Why did we enter there? It's a very simple thing. It was extremely undervalued on every indicator. The RSI was trading at a 12. The daily RSI right here was trading at a 33. We also had a huge amount of sell-off in a single day, which is one of the main catalysts that I thought, okay, I could enter here on this huge sell-off. And I honestly thought we were going to get more sell-off and I was going to average down on this trade. But we did see this thing start breaking out, which is good. So if I wasn't going to enter here, the next spot of entry was going to be up here at 509 on the breakout approach. If we remove those, moving average lines, you can see that huge breakout. That would have been the absolute best entry point if you missed the lows down on the bottom here. Another thing you guys can look for is if the stock does have a higher low. So if the stock opens up at a higher low, that could form a nice trend line, which it kind of did, which is great. So now what we did is we saw the stock pop up and I go, okay, let's see how it reacts to moving average lines. So what we did is we actually just used that 50-day moving average line. So this yellow line here as our stop loss. So if it broke below this trend, below this moving average line, we will just take our profit. And look what happened. It hit it buying pressure, hit it buying pressure. And recently it released their earnings. So the day prior, so that was yesterday, we sold about 50% of our shares because I thought, okay, if this thing just tanks down, we'll sell out the rest the next day. But if it pops up, we can definitely make some good money off this. So for me now, the approach that I'm having is keeping our stop loss near and around the $560 mark. So if it dips down below that, we'll just take our profit, move on. But if we see a rally up to like 580, 600, we're going to really start taking profit up there as well, start thinning out our position. So honestly, a lot of this trade, to be completely honest with you, was just because of this huge sell-off that we entered on. You can see in a couple of days, we had a 3% sell-off. And during this time, this is when like NVIDIA was selling off. This is when the S&P was selling off. So honestly, I was picking just blue chip stocks that were coming in contact with moving average lines and was undervalued on the RSI and taking a trade on them. I know MasterCard's balance sheet was really, really good as well. So that was another indicator that I really liked. But that's pretty much it. A lot of people think you need these glorious, these glorious strategies. And yeah, you do. You need that good checklist, upward trend, sold off down to support line. What's the RSI? What's and when's the earnings? That's all very, very important. Go to the hourly time frame, looking for a support, some sort of breakout. That's what you look for. It's not super hard, but it just takes some time. So guys, if you guys want to sign up with Moomoo, which is the broker I am using, I'll put a link to them down below. They are my favorite brokers, so make sure you guys click that link, sign up. They offer great charting, paper trading, scanning, all of that. So I'll see you guys in there, and check out our school, code beginner for 50% off, and we'll see you guys. Hope you guys enjoyed it. Take care.